Hello and welcome to Investing Confidential, live from Mexico. I'm here to talk about emerging markets. There's a lot of every day. There's something going on in the emerging world that's affecting everyone, affecting you, affecting everyone. We want to talk a little bit about emerging. What is emerging markets? How do they factor into what they call the BRICS? Is there an opportunity or is this a fallacy? And then I want to talk about the one opportunity when I'm here today is Mexico. I think Mexico has been left out of the conversation, which is probably good from an investment standpoint, meaning not a lot of people are crowded into it, though it has been very good performance. But I'll get into that a little later. So let's talk about emerging markets and specifically why should we pay attention? I mean, certainly it's obvious these BRICS. And remember what I told a little bit of the BRICS the last time. It's not really BRICS, it's BRIC, BRIC. And this was a term invented by Goldman Sachs, okay? And for some reason now it's been bastardized by the BRIC countries themselves. But essentially it's Brazil, Russia, India, and China. Okay, so there was no South Africa originally. South Africa begged their way in and got in. They don't deserve to be in because they're not an economic powerhouse, but it is what it is. So the BRICS and emerging markets are very much linked to commodities, right? This is a commodity play. It's always been, it always will be. Okay. Now, there's good and bad parts of being linked to commodities. The good part is obviously if you have, what we think is going to happen, a weak dollar, commodities are going to go up. It's very beneficial for emerging market countries. There's some negatives though, and look, here's one negative. I mean, the emerging markets you can see here, very dependent on coal. Okay, dirty energy. All right. Now, the climate change agenda is blind to this. Okay, they're completely blind to this whole idea, meaning the West, that emerging markets are just overweighted and dependent on coal. They don't talk about it. They talk about the U.S., which is not dependent on coal, but this is the reality, and this is something you have to know. So what's happening right now is, again, going back to the investment thing, fund managers are jumping into emerging markets right now, as you can see. And the future is set up very, very well for emerging markets. In the short term, the dollar's been very strong, so it's definitely an opportunity as these things contract a little bit. But over the long term, well, not long term, medium term, meaning the next 3 to 5 years, could be very good for emerging markets. So I'm going to go through the one by one. I'll start with the BRICS and then go into some of the. So Brazil, it's obvious, okay, despite what I think is a terrible president, a criminal running the country, they are very dependent. They are very commodity oriented. They're huge agriculture producers, largest meat producers in the world, et cetera, et cetera. Oil. So it's always beneficial when commodities go higher. Now, El Nino, which is another very interesting phenomenon that's going on, that's you can see it's affecting climate all over the world. It's very beneficial to the southern part of Brazil, which is the big agriculture area. So uh, this is great for the agribusiness. So it's for exports specifically, soybeans, etc. So Brazil, what else they got for it is they have an independent central bank, and rates are declining fast. Okay, that's a very good. Any country that has defeated inflation pretty much and now has declining rates is going to be very, very interesting, and money's going to flow out of fixed income into equity. So again, on weakness, Brazil is a great opportunity. Now, Russia, look, the war is overshadowing the importance of its energy industry. Okay, Russia is an energy powerhouse, always has been, and now it's gaining alliances in the Middle East. Okay, the new kind of the new OPEC. I mean, one thing that came out of this, Iran now is pumping more oil than Saudi, which is incredible, right? So the alliance of Russia, China, and the Middle East is not good for the U.S. Okay, not good for the U.S. because it's nothing to do with the dollar. It's more about inflation, and because energy, as we saw, this week, is the biggest part of the CPI. And you never know what the U.S. is going to do. They may manipulate the CPI again and lower the rating on energy, but that's the reality. So let me talk about India here. India is the only growth engine in the world right now. It's the only consistent country growing GDP. It is a more domestic consumer economy, so they don't really. Globalism isn't important to India, okay? And but they have major problems. They've got massive poverty, huge pollution, and their energy dependent on everyone else. They don't really produce any energy. So India is a great place to as long as the local economy is going well, irrelevant what happens outside the world, they're going to do well. But if energy, if oil goes over 100, India's going to have a problem. And finishing up with the BRICS, China, uh, look, China's in the news every day. This is why, again, understanding emerging markets is very important. China's got problems, okay? You got freshwater issues, which we discussed a couple of videos ago. China's aging population is a major negative, okay? But the funny thing about all this talk about the BRICS and forming their own currency and the yuan, look, the yuan, folks, is not freely tradable. It's a manipulated currency. It's never been freely tradable. Now it trades, they say it trades versus a basket and all this, but it's not a tradable currency. So it's unlikely to be the trading FX of the world. It's unlikely and probably never going to happen. And China's economically faltering. Xi Jinping, as I told you, I think he's in trouble. I think he doesn't last well, he may last his term, but he's being muted. But if he's ousted, the market's going to explode down there. Now, it's unlikely in the short term. So this is a trading market, okay? But right now, everyone is so negative on China. China's doing a lot of things to revitalize the real estate market. Will it happen? Probably not, but enough that you're going to see some kind of trading rally in China, probably best playable through the ETFs. Okay. Now the rest of Asia, you got Singapore, Vietnam, Philippines, Malaysia, all doing well. Singapore, right now, as you can see here, they have the highest, per capita income, the highest. I mean, this is one of the top economies in the world. They've benefited from the destruction of Hong Kong by China, and so there's a lot of Singapore companies. In fact, Singapore is a very stable currency, and I believe a lot of the brokers will allow you to trade local Singapore shares. But I mentioned all that, but really, I'm here in Mexico today because Mexico, to me, is the jewel right now of EM, and there's a lot of talk about, and the big theme of Mexico is what they call nearshoring. Now, if you haven't heard it before, nearshoring is basically the idea that during the pandemic, we had a lot of problems with supply chains. Nearshoring is bringing back supply chains in Mexico because of the old NAFTA, now it's called USMCA or some nonsense, is going to benefit and it is benefiting dramatically. As you can see here now, Mexico is US's largest trading partner, surpassing China. And that's basically because of nearshoring and as you can see here also, the Mexican peso has been very strong. It's revalued 30-40% over the last few years, one of the strongest currencies in the world. Consequently, the stock market has done well. And then other things. So here you have remittances. Now, remittances are always important to Mexico because this is Mexicans living overseas, bringing money back. It's exploding. Why are remittances exploding? The Mexicans, Mexican people are investing in their own country. Okay, this is important to know. They have this businesses, etc. What you haven't seen yet is a housing boom. That's going to come. That's good. That's going to come. But in the short term, you haven't seen that yet. But remittances are exploding, very good. And then FDI, foreign direct investment, capital investment is rising very fast, which is very positive. But the interesting part of all this is that you can see here, inflation is in decline. So you have huge investment, huge money coming in, okay, capital investment, all of this stuff, and you have CPI in decline. This is very positive. Now, what are the risks? Politics. You have elections in 2024. Everyone's talking about it. Most likely, you're going to get the first woman president in the history of Mexico, and you're going to get a doer. One of these two women is a doer. They're not going to be. AMLO was a guy everyone was afraid of because of what he would do, and you know what AMLO did? He did nothing, and that's the best case for Mexico because he did nothing. And I think there's a risk. It's not that anyone is going to be worse than AMLO because he's a disaster as far as his policies, but he didn't do anything, so he wasn't a disaster. So there could be something interesting here going forward into the next elections. And then the final risk is the crime, the cartels. That continues. It's terrible. But at the end of the day, if you look at the positive versus negatives on Mexico, there are a lot more positives than negatives. And so, the best way to buy Mexico is through the ETF. But on a positive note for you, European, US, I think most everyone, You could open an account at Charles Schwab or through your broker at Morgan Stanley, whatever your broker is. Mexican stocks have been freely traded through U.S. brokers for a long time. And if you want to play the nearshoring, you've got the real estate companies called Fibras. I can't give you any specific recommendations because of just my situation here. And but they're infrastructure plays. There are hotel companies, public. All of these are very good themes. And believe it or not, even with the market having very good performance in dollar terms, a lot of these stocks haven't moved. Okay, they're still relatively cheap. So, in summation, emerging markets, multi-year, it's a positive multi-year play. Okay, buy EM, EEM, whatever you want to play. China is not in a very good situation right now, but in the short term, the sentiment is so bad, and the positioning is so negative. And China's government is doing a lot in terms of trying to pump up the real estate industry that it could pop a little bit, and you should have a really good trading opportunity. But at the end of the day, all this doesn't matter until the dollar begins to weaken. And as I mentioned before, the dollar, I think, will weaken. And once the dollar begins to weaken, this could be a multi-year, tremendous opportunity. And obviously, this is not the last time I'm going to talk about emerging markets. So here from Mexico City, as you can see, it's actually a really amazing place. A lot of expats have come here recently to enjoy the weather, the food, the people, and again, even with the currency value, it's still relatively cheap. So, if you're a digital nomad, there's a lot of them here. Come check it out. But if you're an investor, there's some opportunities, but always be careful out there.